Yo, what's going on, guys? Daniel here from Miracle Trading. So we're back. In this video, I'm going to be talking about, as you can see, you got a comment from Daniel Stack. He has a question about how to identify the difference between manipulations and expansions in real time, which is a very good question. Me personally, I've experienced a lot when um, participating in the manipulation moves and getting wrecked. So this is what I'm going to be covering in this video, how to identify the manipulations and participate in the expansion moves instead of the manipulation moves. All right, so I want you to note that a manipulation move is most of the time, 99% of the time, it's very quick and it's with speed. Why? Because um, it affects the psychological factor of a trader that they get this feeling of missing the opportunity or missing the move. So I want you to notice um, whenever you get this feeling of missing a move, that's the manipulation move. So it's very quick, right? So something else is that it leaves liquidity, right? So it leaves liquidity, goes to the major buy side of the day, major buy side liquidity with speed and momentum. Gives you a feeling that you're going to miss the trade, and what you're trying to do is buy from the retracement, which is most likely going to fail. It's going to give you some little reaction back into the bearish PD array, and then boom. So it's very important to know whether price is in a sell program or a buy program. So whenever um, you notice the manipulation or you want to determine the manipulation move, it's most likely going to be just before the volatility injection, which is going to be either 9:30 or a certain news release. All right. So whenever you have a drawn liquidity, let's say this buy side liquidity, this is a higher time frame PD array, all right, slash buy side liquidity. Whatever move it goes to the upside, it's manipulation, all right? So we want that to be taken out with speed. You can participate in this manipulation move by, for example, you can participate by buying here, somewhere around here. But the thing about manipulation move is you have to get out. I love trading the manipulation moves because it's so fast and you can like get in and out very quickly. But you also have to be careful that it comes back to you very quickly too. All right, because price reverses off here. So something else is this type of formation right here. Let's say price, there is a sell side liquidity right here. Price goes to it with um, very quickly and with less time. Like it's very quick. Like in a couple of minutes, the sell side is taken out. What you want to do is, what you don't want to do is selling the retracement, especially when we get a bullish momentum like this, right? Especially when we go up fast and when you violate 2 or 3 candles by one bullish candle. This is where you don't want to participate. This is where you want to be looking for longs instead of shorts. All right? And something else is you will not have a PD array matrix here. All right? You don't have a PD array matrix here, meaning you will just see red slash black candles falling off to the sell side liquidity very quickly. No PD array matrix, no retracements, no nothing. But then quickly we get this formation right here. So this is when you have to notice, this is when you have to note that this move is a manipulation move. Why? Because price engineers liquidity right here. Let's say there is equal highs here. So you don't want to be selling somewhere where there is resting equal highs or buy stop liquidities. All right. The same as for a bullish scenario, we're going to be going down very fast. Big green candle. Sorry about that. I need to do this. The same when we, in a bearish scenario, we go up very quickly, aggressive, big bullish green candles, taking out the major liquidity, and then what happens? This happens. So when this happens, you will not want to sell right here in this FVG right here. You now want to buy from here. All right. Um, so we don't have any PDRA matrix here. We have equal lows or trendline liquidity, whatever, and against the bias maybe. So you don't want to participate in these kinds of moves. I have taken a lot of trades like this that I've got stopped now, and what I've noticed is price never continues trade or like expands without a PDRA matrix. If you don't know what a PDRA matrix is and don't know how it works, make sure to watch my previous videos in the channel right here. So I'm gonna be trying to find some examples on the charts. All right, so this right here is a beautiful example right here. What we have here is trendline liquidity. We have low resistance liquidity run. We have a range of with very tight and small candles, like there is no room in there for smart money to, there's no engagement in smart money right here. So there is a tight price action right here. We got the London low right here. All right, we got some equal lows resting here. Um, so what we have here is a big and fast move just right here. You see these green candles? So one thing is why you don't want to be buying at the retracement is we already took out liquidity. All right, the liquidity was here. The previous Asian high was taken right here. We got also equal high. All right, so this might be some sort of SMT divergence right here, and you see there is liquidity below, liquidity below, and also the bias is also bearish. We might hit some daily key level, bearish key level. So you don't want to buy here. If there is one scenario where you could buy from this fair value gap or order block or from the discount of the range, is if we were right here and price came back, you could buy from here, all right? So you could buy from here, but since we already took out liquidity, there's no point. The algorithm already did its job. All right. So all this bullish move right here was just an inducement. This was just to play with traders' feelings and play with your psychology. It makes you feel like you're going to miss a move, or I don't know, maybe you're buying at the top or something. So you have to know that the manipulation move is very like it's fast and leaves liquidity behind. Also time, it happens um, right before a volatility injection or sometimes right at the time of the volatility injection, which can be the 9:30 opening, equity opening, or some sort of news release like the CPI, PPI, NFP, FOMC, which we don't trade, and so on. So you can see right here, we have the pity array matrix formed. We have, and price just keeps on dropping. All right. So I'm going to be finding another example. All right, so this is another beautiful example right here. What we have here is equal low, relative equal lows, which is our sell side liquidity. What else do we have? We have this previous, um, this is Sunday's, this previous weekly low, high, I mean, which we took out very aggressively with momentum, with speed. So what you want to do right here is you don't want to buy from here because number one, we have sell side liquidity resting. We have Asian low. We have previous daily low, previous weekly high got taken out, and some we have more equal lows. Um, since we already took out the liquidity, you don't want to be buying from this fair value gap right here. What you want to do is, let's say if price were here, right? You can buy from this breaker block right here, all right? But But since we already took out the buy side liquidity, all of these PD arrays right here is invalid for you to trade. All right, so you can see price is very fast right here. And what price does is buying some time, engineering more liquidity. We maybe have some sort of SMT right here, which we can check if we have. I'm pretty sure we must have an SMT right here. We don't use this shit. No, this was just for education purpose. I don't use RSI. Don't judge me. All right, so we do have SMT. So we took out the buy side liquidity on ES, and we failed to do that on NQ, which is an indication for you to participate in the shorts, and knowing that price is heavily bearish where Nasdaq makes a lower high. So what we do is, this is our dealing range. You can see the first fair value gap that got presented here was these two right here. We inverse that and we get back into it. Also, what we have here is a high, a low, a higher high, and a lower low right here. So this right here is our breaker block. All right, so we don't come really into it because price is heavily bearish, but yeah, so this is a beautiful scenario. If we could have come back to the breaker block, you could have participated in this move right here. So yeah, targeting equal lows and so on. As you can see, let's find another example. All right, so this one right here is another type of manipulation, all right, slash retracement, because a retracement in the lower time frame is just a manipulation. Because let's say we did something like this. All right, we're coming back into a higher time frame key level PD array. So this move right here, it's a retracement slash manipulation. So this right here, you don't want to be participating in when price comes back to premium of the range. You will not be participating in these PD arrays right here, because it's against the bias, and there is no PD array matrix. As you can see, there is just candles dropping and dropping and dropping. So this right here, whenever we get this bullish candle and then immediately coming back down, like it's like a V-shape type um, sort of. So you don't want to be participating in these moves either, because there is no breaker block, there is no mitigation block. It's just price action coming aggressively down to take out liquidity and filling imbalance and offering discount. So this is our dealing range right here. From here, what we have here is this discount wick right here. All right, and we also have a BPR. So we got buy side delivery, sell side delivery, buy side delivery, sell side delivery, buy side delivery. So this area here, right, is a balanced price range. So you want to be using either this order block right here or this discounted wick, which is a um, mitigation block on the lower time frame. This green candle right here. So since we're coming back into the discount of the range, since um, we are bullish, we already closed above a lot of pips, a lot of points above this right here. We failed to not close above here. So this for me, where this is a continuation, this is a break of structure right here. So whatever price comes back down to is just the algorithm offering discount. All right. So this move right here, you can see how fast it comes down, especially down here. As soon as we see, as soon as you see this candle right here fail to close below the previous sell side liquidity, the previous low, that indicates for you that we're still bullish. All right, we're still bullish. And from here on, what you want to do is, I just want to see, yeah. So let's say we already hit our key level right here, or buy side liquidity. Since, yeah, that's right. We have unfilled imbalances. We have fair value gaps, but you cannot be buying from the fair value gap where price already have taken out its goal or its objective. So for you, it's going to be invalid to it's not going to be valid to trade this fair value gap or this PDRA right here. So the same goes to here. You can be participating in this manipulation move. I love trading the manipulation moves, but as I said, it's just against the trend, the bias, all right? So this one right here too, you see we just come back down, down, down very aggressively and we go up immediately. So you would not be participating in these key levels right here. Why? Because we already have equal highs above, low resistance, low resistance. So it doesn't make sense for you um to short from here, to go short from here, because the algorithm, first of all, the algorithm does not go lower in discount. All right, so you cannot be selling right here. And second of all, we have liquidity, which is the major thing in ICT and trading ICT, right? So we have a lot of low resistance right here, low resistance, equal highs. So this for me is not a liquidity sweep. I want a liquidity sweep to be um, as twice as deep as this, let's say this candle right here. So a valid liquidity sweep for me would be a wick like all the way up here and then fail to close above. That's another topic which I'm going to be covering in the next videos I'm going to be making. So also right here you can see price makes trendline liquidity, low resistance, and then just drops heavily and drops very aggressively, making you think you're gonna miss the move, making you trade this, making you sell right here, but you're just gonna get wrecked, right? Same as here, same goes to here. Low resistance, aggressive move down, but what price is just doing is taking out liquidity and offering discount to go higher, right? So you will not be trading this fair value gap right here. Same goes to here, same goes to here, right? Let's say we already took out liquidity down here. We already took out some sort of major liquidity. Yeah, we took out some equal lows right here, which is maybe previous um yeah, previous daily low, I think, right here, which we took out, and then you would not want to participate in this move. You'll get a small reaction and then boom to the upside, because this dealing range already did its job. So there's no need for the algorithm, there's no point, there's like, doesn't make sense if price just continues to go lower from here. So the manipulation moves are very fast and leaves liquidity behind, and doesn't have a sort of PDRA matrix. So this one right here too, you can see we go up and then we go down. So this is where you don't want to, this is where you don't want to sell right here. This is just a manipulation move right here. Why? Because we took out sell side already. We filled this imbalance right here. Okay, we came back to this order block right here, this imbalance. We came back to our dealing range because we already took out liquidity right here. So this is going to be our dealing range from this low to this high. So whatever price comes back down to is just price offering discount. So we took out liquidity. So on the if I just move the time frame a bit higher, we don't see a close below here. Let's just go to the, for instance, the 2 minute maybe, or the 3 minute. Yeah, so you see that on the 2 minute we never closed below this low right here, these lows right here. So that's just a manipulation move, all right? Both to the upside and to the downside. Why? Because look at here, price didn't spend much time. We just had big candles, candles, candles with big volume. So this right here is a manipulation move. This right here is just a manipulation move. This is just price coming back to discount, offering discount, and also there's people taking out liquidity, people who participated in this buy, right? Before taking out the objective, before taking out the buy side liquidity right here, people participate in this move. So price or the algorithm doesn't give them time um, to close their positions. So price just immediately goes down very aggressively to the sell stops right here, sell stops. All right. So price takes out liquidity, and we have this candle right here. We have this fair value gap. We have this order block. We have this mitigation block, right? We have the buy side number one liquidity right here. And you see how fast this is, and compared to the expansion, compared to the distribution, it's fast. It's faster than the distribution. Why is the distribution slower? Why? Because it gives reaction to the false PD arrays, or to the PD arrays that's not in sync with the bias or in the direction, right? So this right here, since it was against the bias, let's say if you try to short here, it's just price engineering liquidity, right? So this is for you to participate and getting in the wrong side of the market right here. So this is why it's slow. This is why all these PDRs that's against, you see this order block, which is not an order block for me, but let's say, if we draw it like this, let's say supply and demand traders, or ICT traders that does not understand ICT so well, trade order blocks. They see this as an order block, all right? But this is not an order block. So same as the fair value gap right here. They they see this as a market structure shift, and then they try to short here. They will go into profit, but then slowly gets back. Maybe they will pyramid or add more positions right here, and they will just get wrecked. And into the order block, we get some reaction, and then to the upside again. So this is why the distribution phase is slower, because it lets smart money to accumulate their orders and pair their orders with your orders. So when you're selling right here, they're buying it from you right here, and then you're gonna get stopped. All right. Um, so this is it, guys. I hope I explained it very well. Um, I hope you liked the video. If you did enjoy the video, if you were with me until now, I really appreciate it. I appreciate your support. If you enjoyed the video, make sure to subscribe. 80% of you guys watching my videos don't subscribe my channel, so I really appreciate you subscribing my YouTube channel and following my social, joining my Telegram channel. All the links are in the description down below. And whatever topic you want me to cover in the next video, just make sure to leave a comment. And until I see you next time, be safe.